Art, good morning to you. I would love to hear what you think the Powell news means for the market.
Well, I think I told you about 2 weeks ago that I thought they'd have to go with Powell if he started counting heads in the Senate. And I think that was part of the decision. I think that people like his advisor, Jared Bernstein, I kind of have a gut feel that his fingerprints are on this case. And I think the market, in line with what Santoli said, it wasn't that they were looking for dovish. If you look what happened, the yield on the 2-year notched up. We got a couple of other yields notching up. In fact, the market is telling us after the announcement that they see the tapering ending in June and the first rate hike coming in July, right after it. So things kind of tightened up. Now we'll get another look in a little bit. At 11:30, we got a 2-year auction, and at 1 o'clock, we got a 5-year auction. That could tell us a little bit more. But I think the market said, thank you very much. You didn't rock the boat. And they're happy with it at this point. And I think that's what you're seeing in the market reaction.
Yep. We've gotten some supportive tweets from Senators Toomey and Romney. Do you think there's any lingering risk that maybe Brainard doesn't have the votes on her part?
No, I think she'll get in. I think Powell will probably get 75 votes or somewhere around there, and she'll do well. I don't think the interesting thing is they did not make her the vice chair in charge of regulation and that kind of structure. So that takes the idea of controversy out. That may be adjusted at a future point, but I think she should not have any real problems. I think this is a decent 1-2 combination. I think that's what they wanted to get, no disruption. I think the market reaction you're seeing is the market's happy with no disruption, and I think, therefore, it should
Art, the financial's seeing a pretty nice bounce on this news today. I'm curious your thoughts. Do you think that the way that this ticket is structured, does that have any change in terms of how banks are regulated?
No, I don't think so. I think it's kind of steady as she goes. I forget who said it earlier. It might have been Leisman. But remember that they tend to, the Fed is an interesting place. It may argue amongst themselves, but when they come out, they always look for a kind of consensus. So I don't think you might hear from Senator Warren and others that they want to see different regulatory structure, but I think the Fed will move in a slow, plodding fashion, and so I don't think you're going to see much of a change. And I think that's what got the market happy here. They're just saying thank you, no surprises, and we'll keep moving.
Art, it's kind of hard to ignore the spread between the rhetoric and the response in Europe, especially Austria and today Germany, and the general mood surrounding caseloads and hospitalizations here. It's up, but the market clearly is looking past it. Why?
I think the market feels that the U.S. is in better shape, certainly, than Europe. Although I must say there was some shakiness and nervousness and a lot of demonstrations in Europe, and the market, there was not much of a move. I don't think they're buying into the idea that any chance that COVID is actually over. But we do have a lot more therapies and treatments for it. So I don't think it is that awful specter that hung over things. I think the full lockdown in Austria is seen as somewhat drastic, and let's see what comes out of that. No, I think COVID is clearly a concern, but it is not it's not the bubonic plague that it seemed to be when it first hit.